What is good, YouTube? China FX back. Amen. So in this video, I'm about to show you how I was able to catch about 200 pips trading AUD USD. So I was able to catch two entries on this trade. But that's how I was able to catch about 200 pips trading AUD USD. Now, if you really want to learn how I did it, do yourself a favor by watching this video to the end. Make sure you stick around to the end of this video. If you're also interested in catching moves like this on your own, just DM me on Instagram at CharonFX to get yourself enrolled in my one-on-one mentorship. If you also haven't yet subscribed to this channel, make sure you hit that subscribe button, make sure you hit that like button, and make sure to drop a comment down below. So with that being said, let's just get to business. Alright, so now starting from the 4H time frame, AUD USD, what's the first thing we did? So the first thing I did was to identify the trend of the market. And looking at our chart, what trend are we in? We're in a downtrend, isn't it? We're in a downtrend. So now after we've identified the trend of the market, what was the next thing we did? The next thing we did was to identify our market structures. So now let's all get into the chart and let's all identify our market structures together. So now starting from here, what do we have here? Price formed a higher low, went back up to form a higher high, came back down to form a higher low. Why is this our new higher low? Because this higher low is higher than that of its previous low. So now this becomes our new higher low. So after this higher low was formed, what the price do next? Price rallied back up to create a new higher high. Why is this our new higher high? Because this higher high is higher than that of its previous high. So now this becomes our new higher high. After this higher high was created, what the price do next? Price came back down to create a low, went back up to create a lower high. Why are we considering this structure as our new lower high? Because this lower high led to the break of this higher low. Yeah, price broke below this higher low, so now this becomes our new lower high. Yeah, good. So now after we've identified our market structures, what do we realize? You realize that price shifted from bullish market structures, yeah, by creating these higher highs and higher lows, to bearish market structure by by breaking below this higher low and by forming a new lower high. So now price has shifted from bullish market structures to bearish market structures. Yeah. So after we've identified our market structures, what was the next thing we did? The next thing we identified was our key levels. Was our key levels? And since you're in a bearish market structure, what key level did I identify? We identified what support to become what resistance. So meaning this higher low, which is our support, is supposed to become what our resistance, isn't it? So after we've identified our key level, what was the next thing I did? The next thing I did was to drop down to my H1 time frame to look for my entry so I can, capitalize on this move to the downside. So now let's go down to our H1 time frames to look for our entries. Alright, so now coming down to our H1 time frame, what was the first thing we did? The first thing we did was to also identify our H1 time frame market structures. Yeah. So we realized that price was creating a series of lower highs and lower lows, isn't it? Good. So after we've identified our H1 time frame market structures, we realized that the H1 time frame was also giving us bearish market structures. So now after price retested our key level, we realized it formed a chart pattern. Yeah. We realized that after price retested our key level, which is our higher low, which is also a support, price created a reversal chart pattern, which is this chart pattern over here. What alphabet does it resemble? It resembles an M. So then this is what we call the reversal chart pattern. Yeah. So after price created this reversal chart pattern, all I was waiting for was for price to break below the neckline with a bearish candlestick. So after price broke below the neckline with this bearish candlestick, that's when I went in for my first entry. Placed my stop loss above the structure level and my take profit to this previous support over here, or this previous market structures over here. Yeah. So after price broke below the neckline of our M, which is our reversal chart pattern, that's when I went in for our first entry, placed my stop loss right above this structure, and my take profit to our previous key level. Yeah, good. So this is how I got my first entry. So for my second entry, when price broke below our key level, what do we realize? You realize it retested it as a resistance. Mind you, our key level was, acting as a support. So when price broke below it, it retested as well. It retested as a resistance. Yeah. So after it retested as a resistance, what do we see? We see a couple of rejections after it retested it. Now, after we've seen our rejections, what was the last thing we were waiting for? What was the last confirmation we were waiting for? We're waiting for a bearish engulfing candlestick confirmation to go in for our second entry. Yeah. So if I'm to zoom in, we realize that after price retested, price created what? A bearish engulfing what? Candlestick. Meaning this bearish candlestick closed below this bullish candlestick. Yeah. So after this bearish candlestick closed, that's when I went in for my second entry. Entered after the closure and placed my stop loss right above the wick of this bearish candlestick. Yeah, giving me 16 pips, risking 16 pips. And where did I place my take profit? Same as my first TP, same as my first take profit. Yeah, giving me a risk to reward of 1:5, risking 16 pips to make almost 90 pips. Alright, as simple as that, as simple as that. So for my first entry, I was risking 23 pips to make 97 pips, giving me a risk to reward of what? 1:4. And for my second entry, I was risking what? 16 pips to make almost 90 pips, giving me a risk to reward of 1:5.42. As simple as that. As simple as that. As simple as that. So this I was able to catch about 200 pips trading AUD USD. In case you didn't understand anything I did, please go back and rewatch the video over and over and over and over again. And like I said earlier on, if you're interested in catching moves like this on your own, just DM me on Instagram at FX to get yourself enrolled in my one-on-one mentorship to be able to catch moves like this on your own. And also, if you haven't yet subscribed to this channel, make sure you hit that subscribe button, make sure to hit that like button, and make sure to drop your comment down below. So with that being said, I'll see you in the next video. FX, peace, I'm out.